The time is now. This is where you need to spot different projects, building in the bear, and locate your great assets at a discount. The bear markets are for preparing for the bull market, and bull markets are where you prepare for the bear market. Did you guys catch that? Well, if you guys didn't catch that, that's okay. I'm going to go and give you guys a 3-step plan in order to prepare for the next bull market. The very first step is to spot projects that are still building in the bear and locate these great assets at a discount. The reason why these assets are at a discount, even great ones, is that people sell the babies with the bathwater. Can you guys guess what price chart this is? Well, this is actually Amazon's. As you guys can see here, in 1997, this thing was trading around a penny to 4 cents. It went as high as in the peak of the dot-com bubble, around $5.30. Right after it burst, where did it go to? It went to 29 cents. You want to see how small this is in the scope and scheme of things? Well, let's zoom out. 20 years from now, you can see here this sucker went as high as 174 bucks. What I'm trying to explain is that people sell the babies out with the bathwater, especially when things get crazy, which, well, was after the dot-com bubble. So Amazon could be considered one of those projects that was building in the bear and was a great company at a discount. This is where you can find these different assets in a bear market because you don't have people choosing to sell. Instead, you're having forced sellers. The difference between forced sellers and choosing to sell. So just like in real life, when you have that family that just sells their home and their closing date closes tomorrow and they got to get rid of everything out of the house, what do? Garage sale. Sell everything as fast as they can, especially if they can't move it quick enough. That's a forced seller. That's where you can get the best discounts and the best deals. The same thing relates into the stock market as well as in cryptocurrency. Now I know you're like, whoa, stop right there. I don't know how to find these good assets. It's actually right under your nose. If you enjoy a protocol and you like using it and you would still continue using it without being paid to use it, that can be considered a good protocol. Let me give you a couple of examples of what I mean by this. Jade protocol. This was a Olympus fork. And as you can see here, most people only use this because it was paying a crazy high APY. Yet people didn't know where the yield was coming from, and in reality they figured out they were the yield. But you can see this thing was like 600 bucks at a point. Now it's like 19 bucks right now, and it's just down only. And that's probably what it's going to be. And the reason for that is because it's constantly emitting tokens and diluting everyone else. And there's less money coming in. And in particular, the only reason why people were using something like Jade Protocol or other Ohm forks was to make quick money fast. And when it's losing money, people leave because the whole reason they got in was to earn money. Let me give you this other site I like to use. This is called cryptofees.info. On cryptofees.info, this actually labels out the different projects that are banging in fees. You can see Uniswap, SushiSwap, GMX, ENS, Synthetics. These guys are killing it in fees. Take a look at those protocols, see what they're doing, and then figure out, this protocol is doing this. Would I still use it without being paid to use it? A good example of this is Aave. I would use Aave any day. I need a borrowing and lending protocol, and you don't have to pay me to use it. In fact, I'm open to pay to use these. This would be the interest rate to borrow against it. Because I have some Bitcoin and Ethereum that I just don't want to sell, but I want to unlock the liquidity. So I would deposit into their lending protocol, borrow against it, and I can still play in these DeFi games. Summary of part number 1. Locate great assets at a discount that are building in the bear. The best way to determine this is, would you still use the protocol if you weren't being paid to do it? I like to use cryptofees.info because that shows there's a lot of people paying to use their protocols and not being paid to use it. Yes, there are some situations where they're still being incentivized, but the point is they're generating revenue. The second step in the plan is, once you figure out the assets that you're looking for, you need to figure out how you're going to allocate. Are you going to dollar cost average every week, every month, every 2 months? What are you going to do? Are you going to LP? Are you like, I'm just going to take a one-time position. I think it's going to trade and I think it's going to consolidate for, 6-7 months, but I'm going to earn fees while it consolidates. Some people choose to do that. They have $10,000 to invest, so they throw 5 at ETH and 5 at USDC. and then they put it in an LP pool and they earn the swap fees. That is a strategy in itself. You're basically capitalizing on the volatility and earning fees for doing it. Or you can simply be the guy that just apes. Hey, I just got $1 million and I just want to throw it at Bitcoin right now and see what happens 3 years from now. 1, spot the great assets at deep discounts. 2, figure out your buy plan. 3, figure out your sell plan. Classic, I'll sell when I feel it, or I got that gut feeling, I'll sell it now. Nah, dude, that ain't gonna cut it. That's a one-way trip to getting wrecked. You need to figure out what your price targets are, and if you don't have those targets, or if you don't meet those targets, what are you going to do? You need to plan all this out. If you don't plan it, the market's going to plan it for you. And believe me, the market doesn't have good plans for you. One example that I like to use, me personally, is a DigiDart strategy. I'm not good at stop losses. I hate having to watch the market. So instead, what I do is I find different assets that I'm extremely bullish on, I think will do really well, and I throw some coffee money at it. Or even a little more than coffee money. Maybe some stake money at it. And then I see what happens. My downside is 0. My upside is infinity. The token can go to infinity. It doesn't matter. But the lowest it can go is 0. My downside is capped and my upside is infinite. That's why I like the DigiDart strategy. However, it is not just simply, let me throw it, see what happens, forget about it. No, you need to manage it, especially when you have the winners winning. You need to let your winners pay for your losers, and you can let the house's money ride, or you do whatever you want with it. Your goal is to get your principal back. That way you can at least have that nest egg and live for another day if none of the investments work out. Another option is the trader's perspective. If you're really good at chasing momentum and capitalizing on that, going long when the market's bullish and shorting when it's bearish. If you know how to manage those positions, that's your strategy. You got it. Take it. Or you can be that statistical guy who's like, all right, if my coin goes up at 2x, I'm selling 10%. If it goes up at 3x, I'm selling another 10%. If it goes up at 4x, I'm selling 10%. You can be that nerdy percentage guy. That's fine. The goal is you need to have a buy plan as well as a sell plan. The sell plan is actually more important. It's really easy to buy stuff. So in general, that's the 3-step plan you guys can use for this bear market. If you guys want to learn more about studying these different tokens, what to look for, and how to research them, I've made several different videos. You guys can check some of the previous videos, or you can think about joining the Discord, where we chat about that and discuss and look for the builders and the bear. The last thing I want to leave you guys with is locating your lucky numbers. This has to do with meme coins. It's okay to have some fun with some coffee money with some meme coins. You want to look for strong communities and ones that have staying power. I say coffee money, and this is important to understand. Meme coins are things you don't throw all your money at. These guys know how to pump. You can just throw a little bit of coffee money at it, just as long as you pick the right ones. There are a bunch of different meme coins. I'm going to show you guys Doge as an example. If you guys would have invested in Doge under a penny back in January of 2021, well, sitting at May 2021, literally 4 months later, you would have done over a 68x. Now, if you were sitting around in the 2020 bear, you could have gotten this at less than 0.3 of a cent. That's hundreds of X's of return. So you can find these different tokens and allocate to them, especially in the bear, because they sell off massively. I'm not saying Doge is a premium asset, but it is a really good meme coin that's been around for a long time, and it's actually stood the test of time. If we go out on a max chart, this sucker's been here since 2014. Anyways, guys, I hope you guys enjoyed the video. Again, the 3-step plan is: first, spot the projects that are building. Second, figure out your buy plan. Third, figure out your sell plan. And then, of course, the bonus is have some fun with some coffee money and looking at some of these meme coins. Let's hit you guys with a wisdom one-liner. Proverbs chapter 13, verses 13. Whoever scorns instruction will pay for it, but whoever respects a command is rewarded, especially coming from your elders or your parents. Listen to what they say. They've been around on this earth for a pretty long time, and they're very smart. Thanks for tuning in, guys. We'll see you guys in the next one.